Back to the J22 report. I'm your host, Johnnie Market. Y'all know that drill. Smash that like button, subscribe if you already haven't. Just a little disclaimer, nothing should be construed as financial investment advice. These are just my opinions, thoughts on the market. Read the disclaimers below. And let's get into today's stuff. So today, you can tell this is real money. This is a coin way back in the day. This is actually all copper. It's an Irish coin before they went to the euro. So you can see that real quick. So look at that. 1968 Erie right there. So cool stuff. But anyway, let's get back into today's stuff. I actually have a really cool theory today, so it'll be close to the end of the video. And you'll just see some of the stuff I look at. But anyway, let's go in today's data. And of course, if you're new or haven't been in, I've told this story ad nauseum, but sorry, had an itch. But I just look at the data because I remember when I used to sell gold. Anytime there was good data, when I sold gold around 2011 all the way through 2000, not 2011, 2012, the end of 2012 all the way through the end of 2014, there was bad economic data. Gold just shoots straight up. Good economic data go down and just, I mean, not on every day, but when the trend was like that. And that's when I learned about the importance of it. And anyway, building permits, 1.459 million. It's above the consensus of 1.456, but way below the previous. So down 1%. That's actually viewed as okay data, not bad. Red book sales 5.6%. I don't see. Look at the S&P Case Shiller. That's up 4.7% over a year. The home price, that's below the consensus of 4.8. And if you look at month over month, it was only up 1% below the consensus of 2%. So the market looks at that as bad, but not like terribly bad. New home sales, 0.676 below the 0.68 consensus. So you can tell new home sales, not good. And of course, bringing back manufacturing. Oh, wait a minute. The Richmond Fed Manufacturing Index down 4%. I guess not. You know, so don't see it coming back. So hopefully it will one day. Just won't under this administration. But anyway, this data I would say is sort of mixed. Like building permits, they were up, but they weren't they were down, but they were below consensus. They beat consensus. Price Case Shiller, the market, even though home prices were up below consensus, and the market will view home prices as going up as a good thing. They're not like me. And the month over month below expectations, but it's still up. And new home sales were not good. Manufacturing, the market doesn't care about. And here's the other one, consumer confidence. We'll talk about this. That is deteriorating. 92.9, way below consensus of 94. So you look at this. So the economic data is mixed again, and I think that's one of the reasons with Trump going after the Fed of low interest rates. He's gonna and data going bad, the market will view this as twice the market up. Americans' expectations for the economy hit their lowest in 12 years. So you can tell sentiment's really bad. They continue to sour on the U.S. economic outlook. Higher prices weigh on consumer sentiment. They talk about the tariffs, but I'm not gonna, to be fair, I'm not gonna blame that. I think that's BS. I don't think it's really. But the higher prices, those are real. So you can tell. Look at that. Decline in financial expectations from consumers. So yeah, there it is. The decline in expectations. It's really meanwhile, those expecting a lower income in the next 12 months rose to 15.5%, highest level since November of 2022. Now, November 2022 was a bottom, so you can argue that this is actually a bottom in the stock market. So, and I'm not saying that sarcastically. I think that very well could, was as you said, I think a big, as I said in previous videos, I think a big stimulus is coming. We're due for a bounce. So this makes it, this might confirm, but yeah, I think we're gonna see worse economic data. So yeah, look at this, more cautious spending. So that's all. You can see sentiment is really bad. Uh, I'm gonna go look at the fear and greed index real quick. Let's see where that is because that's actually been improving to the point where it's rallying. So, see, as we were talking about, I'm gonna try to do a better job of working this way in. But this is the CNN Fear and Business. I'm not a fan of CNN. But look at this. It was extreme fear if you've been watching my videos. Now it's just that fear. I think the market is eventually going to get to neutral to greed, especially with the tax cuts and everything coming. I think it will come, and then after it gets to greed or extreme greed, it's going to sell off again. So that's what I think in terms of yeah, the sentiment is improving and this is I mean, I said numerous, I think it's due for a bounce and that's what's happening. I don't want to act like I'm the greatest or whatever. I made the call. I made the call. It was right. You win some, you lose some. It's the way it is. Remember I said not financial investment advice. And I actually do mean it. Like, watch my show for analysis and, you know, thought provoking ways. I mean, I do that, but do not invest. Make sure it's everything's your decision. They said one, do your own research, listen to other people, listen to multiple people, and consult a financial advisor. Consult advisors. Uh, that's what I do. So let's go into another thing. Speaking of sentiment, Americans have rarely been so pessimistic about the job market outlook, which is, look at this, Glassdoor, which is a job search website. I've been on that. I'm a regular person. So Glassdoor employee confidence fell the lowest on record. Look at share of employees with a positive view of the employer's business outlook fell 44%, lowest on record since the data began in 2016. So this was worse than 2019, the pandemic, and even the bear market of 2022. And let's see if this has anything to do with the markets. Like, look at it here. This was the high, and then the pandemic came, and 2022 is actually the high, and then it's just shattered. So it's fallen for 2 straight years. I don't know how much it means, but I think eventually this will make its way into the markets. But so you can tell sentiment is horrible in terms of the actual economy. I think it will eventually, it's going to lead to a crash. And I think one of these, we talk about the auto loan bubble, credit card, housing and commercial real estate. One of these are going to pop. I think commercial real estate. I used to think it was first, but maybe it's not. I think it will be credit card and auto loans. So some people say auto loans isn't a good enough to crash the market. I say it is. It's going to crash the car company because most of these auto loans they're from auto financing and whatnot. So here's the other thing I want to talk about, and this is one reason I'm not. This is why, even though I think the bear market's over, this is one reason I'm not willing to call a top now. Look at the oil price. If you look at it, when 2020 or 2000 is when prices started getting expensive. Growing up, I grew up an 80s, 90s kid. Oil prices never even came across my mind until 2006 and 7. And so here it is. This is the beginning of the bull market of 2. So you can see I'm going. And then it started getting up to 60, $66 a barrel, which at the time was super expensive. Now $66 oil is nothing, but if you're Gen Z or whatever watching it, this was always expensive. Came back down, and then 81, it was around 147 at one point, but in '08, this is July of 2008. What happened a month or two later? The housing market crashed. The GFC, as they call it, the Great Financial Crisis. And what happened? Whew. So as you can tell, I have an S&P chart here. Look at that, 2000. No, this is the 90s. Let's keep going. 2005, 2000. If you look at this right here, right where my mouse is, this is sort of around 2008, and oil prices spiked and it went to a low in 2009-10. So let me show you the oil here. Then 2011, it went to 106. So you can tell there was even a little bit of brief. It was 2010, and now around 2011 was at 1300. And then oil went up, as you can tell here. Now we're back to the oil. It's right here instead of here. And just look at the stock market. Just it went down. And I mean, look at this. If you look just up, 1332.41, and then it goes back down to around 1158 November. Let's see if we can actually get the November. Yeah, 1158. Yeah, November 2011, it was around 95. It went from 2011 to $95. And then what happened in 2013, around 14, when oil was still at 99, is there was something called the fracking versus OPEC war. And OPEC massively increased production and flooded the market because a lot of fracking was low cost. And then oil went to around $37. And then from 2013 all the way up until the pandemic, oil was just low, $60. And if you look at the market from 2013, it was at 1485, which wasn't all that much. But then 1900 by 2014, 2015, it finally broke to 2000. So that's quite a move. That's literally from like 1400 to that's 600. I forget the exact math, but I'm just gonna do 16. That's a 40% move. That's a big move. And all the way up, and if you look at it, all the way up till 2000, it went from 3 to 323. The market and if you look at the oil market, oil is very low. And then obviously the pandemic came, that was here. So that was cause for that decline. But then if you look at it, all the way up till 222, stock market went from 2,500 basically, yeah, 2,500 all the way up to 4,662 in 2022. Well, what happened to oil? Oil finally went to 100, $107. What happened to the stock market? Went to 35, finished the year 2022 around 3,585. Really, really, market really went down. Oil broke the banks. And of course, what happened in 2022? Oil finally, by the end of 2022, finally went to $76. Like that's 20, went to around $76. Yeah. Went to around $76. And of course, what happened to the market towards the end of 2022? It began a new run. And so it went from that new run from 3,900 to almost 6,000. And of course, oil's low. And so I don't think oil's threatening this, but when will the market make another big down move, like more so than what we see now? Say start watching for oil. Oil goes around 80, 90 to 100. It will decimate the market, just like it did in '08. Even around 2000, it didn't really start moving. If you look at the market, the S&P, it didn't really start moving till after, this is around 2007, 2011. It was around 1100. It didn't really start moving until after 2011 when oil finally went down. And a lot of the move came when oil crashed. So you want to know one indicator to watch in terms of stocks, go look at the oil price. If oil gets to 90 to 100, breaks 100, broke 100 in '08, that broke the economy. 2011, stock market went down 2 to 300 points, which at the time, and then 2022 broke 100 in the middle of 2022. Let's go see where the S&P was in the middle. What happened? Oil broke. It broke the market. It broke the stock market. So yeah, look at the oil stock market. Pay attention to oil. If oil's getting up, you know the market's coming down. So anyway, I was just thinking about that the other time, and this it's also one reason I don't see a crash quite yet. I think there'll be a big stimulus. I think that will get oil up. And right now, as long as oil market's going low. Now, I do think with Joe being out of the White House, all that oil is dumped on the market. I don't think Donald Trump's going to dump the oil, so that's actually going to be good for higher oil prices. I think it's good in general. I don't think dumping on the oil on the market's a good thing. If I were president, I would just empty out the SPRs. Just say sorry, they're not useful anymore. Uh, but anyway, that's all I have. Hit that like button, subscribe. And oh, last thing is I talked about the Permian declines. If those start happening and oil prices start going up, even the drill baby drill, because the Permian will decline at such a rapid rate, prices skyrocketed. That might be bad for the economy, but it also depends. You never know which countries might come in to save the day. So anyway, that's all I have. Thanks for listening if you listened all the way through. Hit that like button if you listened all the way through, please, and subscribe if you haven't. And thank you for listening, and I'll see you next video.